Welcome to Business Middle East. This week we look at the scenarios facing the Fed ahead of its crunch meeting on interest rates. And in Business Snapshot, Middle East investment reaches an historic high. The countdown has begun to one of the most crucial meetings of the US Federal Reserve in recent years. Amid indications that Fed Chief Janet Yellen could stall again on raising interest rates, Fed officials have been giving out mixed signals. It's a particularly important meeting for the Middle East and North Africa markets, and the Fed's credibility is also at stake. We'll have expert analysis in a moment, but first, let's take a look at the factors for and against a rate hike.
It's a guessing game for investors. Some indicators point to the Fed raising the interest rate. Unemployment fell by its biggest drop since 2008. Growth rates are positive, defying negative forecasts. Surveys show business conditions as stable.
Really good.
On the other hand, there are worrying signs undermining expectations of a rate hike anytime soon, at least until December. Inflation remains way below the Fed target. Estimates for the next 5 years are also near record lows. Falling oil prices have increased the risk of deflation. The rising dollar is hurting US exports and the global economy is slowing. The IMF has warned the Fed frequently not to rush its decision.
The Fed has not raised interest rates in such a long time that it should really do it for good, if I may say. In other words, not give it a try and then have to come back.
For more on this, joining us as usual is Nour Edeen al Hammoury, Chief Market Strategist at ADS Securities in Abu Dhabi. Hello Nour. As the Fed meeting approaches, many analysts think it'll be unable to raise the interest rate now. How do you expect the market to react in both scenarios, be it an interest rate hike or a delay of the decision?
For the time being, we're not expecting a rate hike by the Federal Reserve next week, as we've mentioned before. However, if the Fed did decide to raise rates, this would increase panic, at least in the emerging markets, and we may even see a notable decline in global equities. On the other hand, if the Fed decided to keep the rates unchanged, this would undermine the Fed's credibility, as it has been promising the world a rate rise for around a year now. The Fed losing credibility would also be a negative factor for the markets for some time, until the Fed policy is clear in the coming months. So it's a very important meeting this week, and traders should read between the lines.
So we can say that the Fed is not in a good position right now.
Of course, the Fed is not in a good position right now. This is also what we noted a year ago, that the Fed might not raise rates. The Fed delayed the rate hike many times from March to June to September, and now September is likely to be delayed until December. Therefore, the statement is very important and will be key for forthcoming trends.
There's been extreme volatility on the financial markets recently. To what extent could this affect the Fed's decision?
We've seen many warnings across the globe, from the IMF, from the World Bank. Even the Fed's members are not on the same page. The IMF and the World Bank warned the Fed about raising rates, as it might spread panic again. Moreover, the recent market turmoil has sent a clear message to the Fed that they're not ready for a rate hike now. We believe that it's not in the Fed's interest to increase the turmoil in the markets, as we've seen in the past few weeks. Moreover, declining inflation figures give the Fed more flexibility to keep the rates on hold for longer.
التضخم في الولايات المتحدة الأمريكية وعالميا يعطي الفيدرالي المزيد من البرونة قبل اتخاذ قرار رفع أسعار الفائدة.
شكرا لك نور. Thank you Nour, and see you next week. Middle East investments in the real estate sector have reached a historic record, rising by 64% in the first half of this year. London and Hong Kong had the lion's share of these Arab-led projects. Qatar and the United Arab Emirates are the largest investors in real estate outside the Arab world. More in Business Snapshot.
المزيد في Business Snapshot.
After the sharp decline in oil prices, Middle Eastern investors are becoming more active in real estate this year. These investments outside the Middle East North Africa region reached $11.5 billion in the first half of 2015. According to figures published by one leading property broker, Qatar invested almost $10 billion on international property. The UAE invested global assets during the first 6 months of close to $5 billion. The main beneficiary of these investments is London, followed by Hong Kong and then New York. Much of the capital flowing out of the Middle East is being invested in hospitality and luxury services such as hotels and apartments.
That's all for now. Share your thoughts with us via social media using #BusinessMiddleEast. Thanks for watching and see you next week.
شكرا للمتابعة. طابت أوقاتكم.